Hello all, welcome you to the course on corporate laws and governance. In this video, we are going to look at the Competition Act 2002. Now let us get to know about the competition laws that were there in India. In India, the first competition law that we had was Monopolies and Restrictive Trade Practices Act. And this particular act came into existence in the year 1969. And if we look at the major objectives of this Monopolies and Restrictive Trade Practices Act, the first one was to prohibit the monopolistic competition. The next objective was to prohibit unfair trade practices, and the third objective was to prohibit restrictive trade practices. If we look at this Monopolies and Restrictive Trade Practices Act, it was based on the socio-economic philosophy that was enshrined in the directive principles of the state policy of the Constitution. If we look at the directive principles of the state policy of the Constitution, it aims that the resources of the economy should not be concentrated in the hands of few. Every worker should be paid equally for the work they do, irrespective of the gender, whether they are male or female. Youth should not be exploited, and child labor should be prohibited. And this MRTP Act was based on the directive principles of the state policy of the Constitution. This MRTP Act underwent amendments at different time period from 1974 to the 1991 because of the changes that happened in the competitive environment in the economy. Even though the changes were made, the government felt that they have to go for the change in the law. For the reason, the Indian economy went for the economic liberalization in the year 1991, as a result of which the competitive landscape in the Indian economy totally changed. So what the government did was, the government went for the formation of a committee under the chairmanship of Mr. Raghavan, and this particular committee looked into the competition laws that were followed by different countries across the globe, and they came out with their recommendations to the government on May 2000. And based on the recommendation that this committee gave, the government enacted the Competition Act in the year 2002. This Competition Act 2002 underwent amendments in the year 2007 as well as in the year 2009. 2007, the amendments were made in order to include the provisions for mergers and acquisitions, and in 2009, the amendment was done in order to include the increased penalties for anti-competitive behavior. Again, one more amendment was made in the year 2023, where the amendment bill was successfully passed in both the houses of parliament by the government. And the idea of this amendment in the year 2023 was to strengthen the enforcement mechanism and to increase the penalties for non-compliance with respect to the Competition Commission of India orders. Now let us look at the major highlights of the amended bill 2023. The first highlight was the introduction of the deal value threshold, and this particular provision was added in section 510 of the Competition Act. As per this deal value threshold, any kind of deal that happens between two companies, and if that transaction value of that particular agreement is going to be more than 2000 crore rupees, then it should be brought to the notice of the Competition Commission of India and their approval to be got. The next highlight was to do with the definition of the term control. Previously, in the earlier act, the control was defined as the ability to influence the management's affair, but this particular bill brought in more clarity with respect to the definition for the term control, and as per this amended act, control means the ability of an individual or an enterprise or a group to exercise material influence over the management's affair or in their strategic and commercial decisions. This particular bill gives more power to the Director General, and the power is to do with seeking information from the legal advisors of the companies that are involved in any kind of anti-competitive behavior. So, the legal advisors should give information as per the requirement of the Director General during any such investigation. One more highlight of the bill was the inclusion of the provision for settlement and commitment. As per this, if the parties that are involved in any anti-competitive behavior, when they are willing to pay compensation for the anti-competitive behavior, then the Competition Commission of India can stop further investigation into it. Similarly, when the companies commit that they will go for a behavioral change or a structural change in the company, as a result of which the anti-competitive behavior will come to an end, even in this case, the Competition Commission of India can stop further investigation into the matter. One more highlight of the bill is to recognize the hub and spoke arrangement that is mentioned in section 3, subsection 3 of the Competition Act 2002. What it means is, whenever there is going to be any cartel arrangement among the companies which is considered to be anti-competitive in nature, it is not about those parties who are actively involved in this cartel arrangement. It is also about including those companies and the individuals or groups which have played a passive role in the furtherance of this cartel behavior. Even they would be brought to the penalty or the punishment whenever there is going to be a cartel arrangement. To make it very clear, whenever there is going to be any cartel arrangement, both the parties that are actively involved in the cartel arrangements as well as those parties who have played a passive role in the cartel arrangement would be brought under the penalty. The next is about the change in the nature of punishment. Previously, as per the previous act, the punishment was more to do with fines, but this amended bill talks about punishment both in the form of fine as well as in the form of penalty. Now, let's look deeper into the old Competition Act as well as the amended Competition Act. The first is, as I mentioned earlier, it was about the inclusion of the deal value threshold. As per the amended competition law, any kind of transaction that happens between two entities, if the transaction value is going to be more than 2000 rupees crores, then it would be it should be triggered to the Competition Commission of India, who will look into it and will give their approval. Previously, this transaction value threshold was not there. Whenever the asset value or the turnover value exceeds by 1,000 crores or 3,000 crores for the companies that are getting into the agreement, then they have to seek the approval of the Competition Commission of India, and the transaction value was not taken into consideration. This particular amendment was made mainly because of certain investigations that happened in the Indian competitive environment. One prominent case was the case of Google Incorporation. Google Incorporation was fined by Competition Commission of India to the extent of 21 million US dollar for the misuse of their dominant position in the search engine advertising space. There were also allegations like the Google was not allowing the apps, those players who use other apps to get listed in the Google Play Store. There was one more allegation that Google was actually compelling the mobile manufacturers to pre-install their Google apps in the mobile phone. This is one case. One more case was the Competition Commission of India had to investigate the case between the Facebook and WhatsApp. When Facebook acquired WhatsApp, there was a concern that there would be a threat to the privacy and security of the data of the consumers who come under this WhatsApp. Again, one more investigation had to be made by the Competition Commission of India with respect to the preferential treatments that was allegedly given by Amazon to the selected suppliers, as well as the alleged usage of predatory pricing in order to throw away the competitors. All these incidents made the Competition Commission of India to come out with this new provision of including the deal value threshold. So it is not about the assets of the target company exceeding 1,000 crores or the turnover exceeding 3,000 crores. Even the target company could be small in terms of assets, in terms of turnover, but if a particular transaction between two entities are going to exceed 2,000 crore of rupees, then it should be brought to the ambit of the Competition Commission of India, who will have to give the approval before the companies want to take it forward. The next is about the duration of the sanctioning of the combinations. Combinations means any kind of mergers, acquisitions, amalgamations and takeovers are called as combinations. As previously mentioned, whenever the transaction value or the asset value and the turnover value exceeds the targeted value that's been given by the Competition Commission of India, then the approval to be got. So whenever the company decides to go for such kind of acquisitions, mergers and takeovers, within 30 days of such decisions, they will have to they have to seek approval from the Competition Commission of India. And there is a time limit within which the sanctioning to be given by the Competition Commission of India. Previously, it was 210 days. Competition Commission of India has to give the sanction within 210 days from the date of requisition from the companies. And now, as per the new law, amended law, it has been reduced to 150 days. So the Competition Commission of India should give their approval within 150 days instead of 210 days. This is kind of considered to be good in the sense the entire process has been expedited. So the approval would be got in a shorter span of time than it was earlier. So it gives a kind of confidence to the players in the market as things are expedited now. The next is about the concept of control. In the previous competition law, it was the control was about having influence over the management's affair. Now the Competition Commission of India has given a very clearer explanation or definition for the term control. It is about having a material influence over the management's affairs, or it's any kind of commercial and strategic decision. So more clarity had been brought in for the term control by the amended competition law. Previously, in the previous law, the anti-competitive agreements were covering only two types. One was the horizontal competitive agreements, another was the vertical competitive agreements. What is horizontal competitive agreements? Horizontal competitive agreements are the agreements that different companies who do similar business get into, and when it becomes anti-competitive, then the investigation would be taken into that matter. If it is horizontal, the companies who are in similar business come into an agreement. If it is vertical, the players at different stages of production come into an agreement. For example, the supplier and the producer can come into an agreement. Similarly, the producer and the distributors will come into an agreement. The previous law was talking about only the horizontal agreement as well as the vertical agreement, but this amended competition law talks about even the non-competitor and non-market participants. Not that they will have to be connected with the company either vertically or horizontally. Somewhere down the line, they may have connection with the company for doing the business better. For instance, the technical support by an IT company to a restaurant can be given as the example for the non-competitor and non-market participant. So this new or the amended competition law includes this category also, that is non-competitor and non-market participants. Next is to do with the commitment and settlement in the anti-competitive proceedings. Now, as per the amended competition law, whenever the companies that are involved in the anti-competitive behavior, once they commit themselves that they will go for a behavioral change or the structural change which will put an end to that anti-competitive behavior, or when they say that they will give the monetary compensation for the anti-competitive behavior that they had done, then the Competition Commission of India has they may go for stalling further investigation into the matter, which this kind of scenario was not there in the previous law. Next is to do with the offences. As per the previous law, that is before the amendment, whenever any company is not following or is not adhering to the orders of the Competition Commission of India, this non-adherence will lead to a fine of rupees 1 lakh every day, and this will keep continuing until they fall in line, and in case, and this would go up to an extent of 1 crore rupees. Now this has been changed, and what the Competition Commission of India would do is they will actually assess the nature and the extent of this non-compliance with the Competition Commission of India's orders. Depending on the nature and the extent of the non-compliance, the fine would be imposed, rather than having a standard like 1 lakh rupee per day up to it reaches 1 crore rupee, and this would keep continuing until the company follow the Competition Commission of India's rules. So this is one change that has happened. One more change is to do with the penalties with respect to the turnover. Previously, the penalties would be imposed to the extent of not more than 10% of the turnover of the company. When we say turnover, here they talk about the average turnover, which is getting calculated based on the 3 preceding years, financial year of the company. But this amended act has brought in clarity to this average turnover. Here they are talking about 2 things. One is the relevant turnover, another is the global turnover. What is this relevant turnover? If it is a relevant turnover, the turnover would be calculated in such a way, only that part of the turnover would be taken into consideration which can be applied to that anti-competitive behavior. Not the entire turnover of the company would be taken for penalizing the companies, but it is about only that part of the turnover which can be accounted for the anti-competitive behavior. So this is one change. One more change is to do with global turnover. Whenever there is a conglomerate, the conglomerates have their business at different countries, or they have their business across industries. When the penalty is calculated based on global turnover, then what happens? The entire turnover of the conglomerate would be taken into consideration. In a way, it brings in more accountability on the part of the conglomerate before they get into any kind of agreement which may lead to anti-competitive behavior. Next is about the relevant market. We always talk about the product market as well as the geographical market when we talk about the relevant market. Here in this particular case, it is about the product market. What is this relevant product market? Relevant product market is that market wherein the consumers can substitute one product for another product. When the substitutability is there, we call that as the relevant market. As per this amended competition law, what the Competition Commission of India has done was, it has also included the supplier market. Yes, it is not about, it is not only about the consumers, it is also about the suppliers, and any goods and services that are substitutable by the suppliers will also come under this relevant market. The next change what we have is the appointment of the Director General. As per the previous law, Director General would be appointed by the central government. As per the amended competition law, the Director General can be appointed by the Competition Commission of India, but this appointment should be approved by the central government. And if we look at the members of the Competition Commission of India, they have to have the qualification of being the judge of a high court, and they also are expected to have expertise in different fields like economics, law, commerce, management, etc. And they need to have a minimum of 15 years of experience in all these fields. Now, as per the amended competition law, they have included one more domain, which is technology. Even technology, they need to have expertise in the field of technology too. Now, let us look at the competition law and policy. What does it actually mean? If we look at this competition law and policy, the purpose of this competition law and policy is to promote efficiency in the market and to maximize the welfare among the consumers. And how do? They do it through the measures, and the government takes these measures so that they can bring a change in the behavior of the enterprise and the structure of the industry. So, the purpose of the competition law and policy is to promote efficiency in the production process and to maximize the welfare of the consumers. And this is getting done through the various measures that the government takes, which brings in a behavioral and structural change in the enterprise. There are two elements. One is the competition law and another is the competition policy. Competition policy is to do with the policies that the government has with respect to trade, with respect to foreign direct investments, with respect to the kind of deregulation policies that they have, like privatization, or for that matter liberalization, all these disinvestments, whatever policies the government has, all that is getting covered under the competition policy. When we look at the competition law, the purpose of the competition law is to remove or prevent the anti-competitive practices. What is competition then? The competition means every firm tries to get the patronage and the support of the consumers, and they want to get the patronage of the consumers with the objective of maximizing the profit, maximizing the sales, and to increase the market share. This is what we call it as competition. Do we need competition? Competition is definitely needed, because only when there is a fair competition, what happens? The consumers would be getting variety of products at a reasonable price. Similarly, the producers can also innovate, come out with quality products, and they can bring in efficiency in their production process. All these are possible only when there is a fair competition. Then what is unfair competition? Unfair competition happens when the companies or the players in the market involve in the activities like colluding with other players in the market to fix the price of the product. When such a practice happens, what happens? The consumers get affected. They have to pay a higher price than what they are supposed to pay, because the competitive environment gets affected when the players in the market come together, decide on the price for their product, and they all charge a similar price, and ultimately the consumers are getting affected because of such behavior. So, collusive price fixing is considered to be an unfair competition. Another unfair competition that we can mention is a company can deliberately reduce the supply of their product, and the purpose of reducing the supply of the product is whenever the supply gets reduced, this is about creating an artificial scarcity. So, when the supply comes down, automatically the price of the product increases, and the consumers get affected. This is a deliberate act. It hasn't happened on its own. And what happens? These producers hoard the products. They reduce the supply of the product with the objective of increasing the price of the product. This is also considered to be unfair. And if we look at it, sometimes what happens? The companies in a particular industry will come together, and they may be charging a very low price, which we call it as predatory pricing, with the objective of not allowing any new players to enter into the market. So, that is also considered to be bad or unfair. And the next is about the allocation of market. The existing players in the market, what they may do is they may be coming together and they would be deciding what are all the different geographical area each one would be covering, and here also some sort of, it is not a natural competition. They collude and they decide which segment will be taken care by which firm. This also is considered to be unfair for the reason the consumers will not be getting the best deal, and not only that, it may even affect the new players who would want to enter into the market. Sometimes what happens, the companies may say, may force the consumers to purchase another product in order to purchase the product that they want to go for. For instance, for example, the bank may insist that a depositor should have an FD if they want to have the locker. So, here what happens, this is what we call it as tie-in sales. Locker is a separate arrangement, and in order to have the locker, a bank may compel the consumer, the depositor, to have the FD account. This is also considered to be unfair, and this is the example that we have for the tie-in sales. Predatory pricing means here the company would be charging a very low price for the product. The objective of that charging a low price for the product is to ward off or is to send off the existing players in the market who may not be in a position to charge a lower price. Maybe they will not be that big as this company is. And any activity which is not consumer friendly or which affects the free trade is considered to be unfair. So whenever we talk about this free trade is needed because free trade creates a very healthy competitive environment to the producers, and it also helps the consumer to get the best deal in terms of price, in terms of quality, in terms of variety. They get the best. Free trade cannot be equated with unregulated trade. Unregulated trade will lead to all these unfair competition, because when a particular trade is unregulated, there are chances that the producers would involve in all these kinds of anti-competitive behavior, which will affect the interest of different stakeholders like the competitors or the consumers or the suppliers. Next, let us look at the objectives of the Competition Act 2002. The first objective is to prevent practices having adverse effect on the competition. The next is to promote and sustain competition in the market. And third one is to protect the interest of the consumers. And the final objective of the Competition Act 2002 is to ensure freedom of trade carried on by other participants in the market in India and for matters connected therewith or incidental thereto. So we can say that the objective of the Competition Act, they want to prohibit any kind of anti-competitive behavior. They want to create a healthy competitive environment. They want to protect the interest of the consumers. It is not only about protecting the interest of the consumers, it is also about protecting the interest of other stakeholders like the supplier competitors. If we look at the framework of the Competition Act 2002, the section 3 of the Competition Act deals with the prohibition of anti-competitive agreements. Anti-competitive agreements are those agreements which actually creates an adverse effect in the competitive landscape. As I mentioned earlier, like collusive pricing, tie-in sales, predatory pricing, or any kind of these agreements are considered to be anti-competitive in nature, and it affects the competitive landscape. The next thing is to do with prohibition of abuse of dominant position. Section 4 of the Competition Act 2002 deals with this prohibition of abuse of dominant position. When a particular firm is big enough, when they have more resources in comparison with the other players in the market, there are chances they would be misusing their position. They may be stopping a few sections of the firms through predatory pricing, or they may be giving a preferential treatment to a few of their clients. When they do all this, this results in abuse of the dominant position. So Competition Act wants to prohibit the abuse of dominant position by big players. And the third one is about combination. When we say combination, it is to do with mergers, amalgamations and takeovers. Competition Act 2002 wants to regulate this combination. Section 5 and Section 6 of the Competition Act deals with this. We have already seen, like whenever two companies want to merge or amalgamate or take over, and if the asset value of the target company is going to exceed say 1,000 crore rupees, or if the turnover is going to exceed 3,000 crore rupees, or now we have also spoken about the transaction value. If the transaction value is going to exceed rupees 2,000 crores, then it is mandatory for the company to get the approval from the Competition Commission of India, and they will have to do it. They will have to ask for the approval within 30 days from the date of confirming that they want to go ahead with such a kind of agreement. And the Competition Commission of India will give their sanction within 150 days. The next is about the competition advocacy. Section 49 of the Competition Act 2002 deals with this competition advocacy. What is this competition advocacy? We talk about the Competition Commission of India. This Competition Commission of India is the regulatory body, and basically if you look at it, we have a chairman, we call it as the commissioner, and the members, and there should be minimum of 2 members and the maximum of 6 members in this particular in the Competition Commission of India. And we have already seen that they need to have a relevant knowledge in economics, law, business, etc., and they also are supposed to have knowledge in technology, and they have to be qualified to be the judge of for the High Court, and they need to have minimum of 15 years of experience in the relevant field, and they play a role of an advisory in the sense whenever the government wants to make changes in the policy with respect to Competition Act. Competition Commission of India is expected to give their opinion on the policy change which the government is planning to go for. Just because the opinions that are given by the Competition Commission of India, it is not mandatory for the government to take it. But whenever the government looks for any kind of guidance, it is the role, or the Competition Commission of India is expected to provide all the relevant information and their opinion. It is not only about being playing an advisory role. Of course, they play the regulatory role, and they should also create awareness among the public about this anti-competitive behavior. There are some important concepts that are defined under Section 2 of the Act. One is about acquisition, because consolidation is one of the provisions that we have in the framework of the Competition Act. What is this acquisition? Acquisition means when a company acquires or agrees to acquire the shares, voting rights and assets of another company, or when a company acquires or agrees to acquire the control of the management's affair or the control of the assets of another company, then it is called as acquisition. And there is one more concept that is getting defined in the competition, in Section 2 of the Competition Act, which is to do with the agreement. Agreement is considered to be any kind of arrangement or understanding or action in concert between two firms, or between two individuals, or between two groups, whether or not it is in writing or in a formal manner, whether or not it is legally enforceable, then all such arrangements are considered to be an agreement. The next definition what we have is about the cartel. Cartel is about the agreement that that the different stakeholders have, like the producers, suppliers, we talk about the distributors, service providers, when they come to an agreement among themselves with the objective of limit, control or attempt to control the production, distribution, sale or price of or trade in goods or provision of services, then it is considered to be a cartel arrangement. Whenever we talk about this cartel arrangement could be an international cartel arrangement where this kind of agreement happens between firms that are there across countries, which we call it as international cartel arrangement. There could be import cartel arrangement when the companies import goods from another country, and when they are going to get into such agreement, then it is called as import cartel arrangement. But cartel arrangement is considered to be anti-competitive in nature, and which is prohibited under the Competition Act 2002. Thanks for listening.